Good afternoon, traders. Let's take a quick look at today's key market moves. The US dollar index saw a sharp swing on Tuesday. It dipped early after a major downward revision to the jobs data, but then bounced back and closed higher around 97.8. Treasury yields also edged up, with the 10-year moving back about 4%, reflecting expectations for Fed easing, but not full confidence yet. In politics, the US Supreme Court confirmed it will hear arguments in Trump's tariff case this November. And in Europe, President Macron named his defense minister as France's new prime minister. And meanwhile, reports suggest the Bank of Japan may also reduce purchase of ultra-long bonds next spring. On the trade front, Trump said negotiations with India are progressing, with a call planned with Prime Minister Modi in coming weeks. Over in Middle East, Israel carried out strikes in Doha, targeting senior leaders. Qatar condemned the attack, while Washington voiced regret, saying it was notified only moments before. Turning to gold, prices spiked to a fresh record above $3,670 before pulling back sharply. A shooting star candlestick on the daily chart hints at short-term fatigue, but the broader uptrend remains intact. Support lies near at 3620 and 3500, while the longer-term targets still point higher. In currencies, the euro is stuck in a tight range between 115 and 117.75. A close above that top level would reopen the uptrend, while a break lower could confirm a deeper correction. Traders are watching the ECB meeting and US inflation data later this week for the next catalyst. Finally, oil. WTI briefly rallied near $64 but stalled right at its 20-day average before slipping back. Sellers regained control, leaving the bearish flag pattern in place. Key support sits around $62, with risk extending towards $60 if those levels give away. So that's all for now. A volatile session driven by jobs revisions, geopolitical headlines, and technical signals across gold, forex, and oil. Stay tuned for the US inflation numbers later this week, which could set the tone heading into the Fed's September meeting. Thank you.